Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Thursday. It's been a long week, lots of earnings, lots of things going on, lots of trades. This time a little bit more to the long side with some traction. I know today was a bit of a big push early on and then some momentum left the market. I guess some traders squaring off positions based on the fact that jobs reports tend to be a little volatile and not everyone likes to take excessive risk into a jobs report. We did have the Fed yesterday and the market held up well, and then today wound up being a little bit of an inside day. So let's just get right to the charts and check out what's going on. You go to the chart of the SPX and you will see here you have the S&P. You know, I guess it makes sense, right? Why would it want to just start blasting through resistance when you have a number tomorrow that could be a surprise or could be a miss, it could be whatever it wants to be. We'll see what happens. I think most on the street are thinking 205,000 or 200. I think anything around 200, and we continue to go. A big hot number, 250, probably also good. Anything below 160, 150, we open lower, and then we figure out what's going on next. People don't want more QE. They actually want some good news to be good news. But anyway, this is resistance, 1888, and then here is 1897, and we're above the 8 and 21 days, so we're still acting pretty normal. You go to the Qs, and you have a tale of a few different patterns here. You know, remember this head and shoulders top here, triggered to the downside, red dog reversal, higher low. Not enough juice to trade through this downtrend that's been in place for a while, ever since actually late February. So maybe tomorrow we'll see what happens. You know, right down 88.15. This is now pivot resistance. We'll see what goes on there. Lots of people were pointing out the weakness in the Russell today. You know, I wouldn't say it's falling apart, but it's not really bouncing. It's just hovering here, and it's not even near this downtrend or even this one. So just a weak group, and you know we've seen weak groups before, and this does look like that head and shoulders pattern, and this hasn't put much of the bears on alert. So we'll see what happens here. You know, this is still the 200-day, 109.79. It's big support. We'll see what this means. As far as the XLF, what'd that do today? Not a heck of a lot. Just hovering in the inside range here. So today was one of those days where you had to make some cash flow. You had to pick and choose your stocks, pick and choose your pivots, and manage them. Because a lot of trades that were good in the morning didn't turn into good trades in the afternoon. I know for me, I came in and wanted to see if Facebook would continue to extend on the back of Yelp's good earnings or good turnaround. I wanted to see if Tesla could break above 208, 2010, and I figured Apple would just be somewhat of an inside day based on the fact that yesterday it had a topping tail and it would need to work out. So anyway, you go to Tesla, and a winning trade could have easily turned into a losing trade. Right here was the trigger right off the bat, traded through 208.16, hit as high as 214, and then came all the way back down. So it's not an easy trade. You really have to, if you shorted early, you got squeezed, and if you didn't take your trade or you bought a dip, you definitely were a little upset. You look at the 5-minute chart to see what you could have seen, and you look here, and this was a very clean move in the beginning. Boom, boom, and then it was basing, and then once it really broke this, you had to get out of the way, and then came down, tried to bounce, no bounce, then broke below this area, and that's not the easiest type of trade to deal with. And this is the type of trade we've been dealing with a lot, where a winning trade could turn into a losing trade, and if you buy a dip, it might turn into a bigger dip, and you just get pushed out of the way. Google was something also we tried to focus on. We looked at the overall pattern here. This was the uptrend, broke to the downside, red dog reversal almost at the 200-day, a little bit of a bull flag. It actually, in the end of the day, was stronger than the beginning. When the market was stronger, I was in it also, and I made some money, but it was hard to trust because it was weak, and then later got a little stronger. So we'll see what happens into this area if we get some kind of positive number to see if some of these high beta names could get going. And this I wouldn't say is like a super growth name. It's more of a value growth name. We'll see how that goes. Netflix also had a really big squeeze off the bat. I drew this morning, the 21-day, and that's where it got to. So traded above the pivot, squeezed through. If you didn't take your trade, you probably are like, what do I do now? These type of broken setups, you have to take. You have to take your money, and you have to be careful buying dips. You look at the 5-minute chart here too. very fluid type of move. Quick move, bull flag, continued through, bull flag, continued through. Then you could have pretty much drawn your trend right here. That's when it broke a little bit. Maybe you tried to buy this first dip, and then it really just turned into a lethargic nothing. Overall, still kind of good, I guess. If some people would try, you'd go in here, you'd say, oh, let me look at my Fibonacci retracements and see how much of this move did it hold. You go from here to here. Well, that's not a Fibonacci retracements. Here is your Fibonacci retracements. You go from the start to here. And overall, it pulled in about 50% of the move of the day. So it's still considered okay, just not that pent up. So let's look at what Apple did. Apple, you go to your daily chart. Yesterday gave you that topping tail, which was the first time I kind of got out of the way. And today tried to be strong. They wanted to shake the tree up. They broke it below 589, put in a low of 586. I had some bids in 585, 584, but caught a little decent trade here. And still, this is acting very well. You could draw your Fibonacci retracements here too, okay, as it digests a huge move. Some would say, okay, I'm going to draw it like this from the gap up to the peak, which is right here. So you haven't even pulled in 25% of this overall move. So that's why you don't want to be so active and so fast, because 25% would be 583. 38.2% of this big move would be 574, and 50%, giving back half would bring it down there. I personally wouldn't do it this way. I would say, you know what, let's go from where you could actually have had a trade from right here to this peak, okay, to measure the speed. And if you do it that way, you will see that from the gap up to here, it's pulled back between the 0.38, 0.25. So to me, that's still deemed strong. That's still deemed you better be on your toes, because this could make a new high at any time. And it still could be good, even if it pulled into this 580, which would be a little bit more than halfway of this wide range bar, and that would just mean the speed would slow down. So as of today, if this happens to be the low of this move from here to here, it's super duper strong. Be on your toes, and dips are going to be met with buyers, and you better at some point be a buyer when it breaks above this 594 again. If tomorrow, they want to pin it at 590, which they might, it all depends on the job number. We'll see what happens here. So at this point, still super strong, super nice commitment, and write down today's pivot low. Then you have 584 or 585-ish, and then 580, and then here at this point of 576, then it's just like a range-bound mess. If you want it to be pent up and you want it to be fast and furious, probably don't want it to get much below today's low in the coming session or so. Just some thoughts out there. As far as Facebook, if you remember, talked about this potential pattern here, this head and shoulders pattern. If this neckline were to break, what happened right here? The neckline didn't break, so what does that do? Takes this off the table. And then what happened when Twitter came out with numbers, it went from red to green through this pivot, nice little area. Then today you had your follow through into some bigger resistance. So now see what happens here next. Now it turns from an A trade on the day Twitter announced to see whether it can go green and push to, take a little scalp here and there, see if it could hold above this maybe 60 area and build a high-level flag to this move. And then if it does, then maybe you get a more calculated trade through this resistance. But I do think it needs a few days to digest. So here was your squeeze back up into resistance. Now let it prove it could hold higher before getting back on its game. So now it just changes. LinkedIn out after the close. They had a decent report. It's been battered and bruised. I was talking about, in the VTF, everyone's like, what do you think? Is it like Yelp? It was at 156. I said I would be more of a buyer than a seller there. I'm not sure where it is now. I guess we could look at the time template. Instead of me being in here talking to you, I probably should be out there trading it, but this is the life I chose. I have to be a content provider here and there, and that's what I'm doing right now. So where is it here? 157, all over the map. So I guess maybe I'm better off being in here, because it definitely is not the same cut and dry move that Yelp had. Boom, if you bought it up here, you're in a little bit of pain, but overall below where it closed, so you got to be careful. Oh, now I feel better. Thursday night I can go home. I'm kidding. I'm actually watching this blindly. I don't see where the face of the camera is because none of these screens are turned on. So pardon me if I'm looking elsewhere. What did the banks do today? Let's see. Goldman Sachs. Not much here. Still broken stock. You don't have much to work with. Here's one trend to the downside. Not even contending. Here's another one, I guess. And you could say this is a level of resistance. Here's a reversal here. I guess it's trying to regroup some above the 8 and 21 days, 159-ish. Above this, maybe the market could move a little bit, but all in all, out of play. The banks are just really not very compelling. You still have this lower range here in Bank of America. Here was your breakout failure. That's when I was carrying along from here. If you were watching the VTF, nice move. Was long into earnings actually. Once it did this, I was out. And then here is where I recommended if you're just an intermediate trend follower. This was a trend that broke. Tried it here, got stopped out there, and wasn't involved for this mess, thank goodness. And now just watching from afar. People are like, what do I do at Bank of America now? Well, it all depends. If you were long this thing from this breakout here, remember that awesome breakout that we had at 10:10? I wish we were back at that day. And you sat through this whole thing. Okay, now it's below the 200-day. Sometimes when you're below the 200-day, which is the first time it's been below the 200-day during this entire mess, you got to be a bit careful. You can keep it in the drawer, but that drawer could become real smelly if it stays below there. Do I think we have a banking crisis? Do I think this can go a lot lower back to where it was? I don't think so, but if we were to fail at the top end of the range in the S&P, chances are if this gap doesn't get filled, which it seems like it's having a hard time doing, you could see some lower prices. Usually something stays below its 200-day for 3-4 days and doesn't get back above it. It continues in that direction, especially when you have a big gap open, because obviously, some people bought it at 1750, 17, 1650. So on this big gap down, like, oh, it's on sale, below 1540, and it doesn't look like people are grabbing that sale. So it might have to become more on sale. So we'll see what happens. JP Morgan still hasn't filled this gap. Just hovering in here with not money trades. You don't really see me trading the banks right now because there's not much continuity, not a lot of action. What did gold do today? Gold's been weaker. It, I guess, opened near the lows, held this longer term support, closed somewhat green. So who knows? It's still lethargic, random. To me, there was like one really calculated move in gold, which I took options on earlier, which the VTF saw when it traded above this little wedge pattern here. And then ever since this peak, where it had this exhaustion gap and filled it quick, it's been pretty lethargic and erratic. It came in, came up, gap down, this gap never got filled, and now it's hovering on support. So I just think it's not really a great thing to be focused on in trading, but do what you want to do. So with that said, the Dow is near or at all-time highs. You have the S&P knocking on the door. You have the Qs and tech and bios bouncing a bit, but you still have to pick and choose your spots because if you stay too long or buy a dip, some of these things turn into a bigger dip. But each day there is trades to be had. You could use your day 1 to day 4 methods where day 1 wakes it up and then day 2 confirms it, day 3 you sell it. And I think we're lucky to get that day 1 through 3 if it takes place. Sometimes at day 1 you hold on to it, on day 2 whatever you have your trailer in and you lose that and it happens quick and then you just have to get out of the way. That was like the tape we were in a few weeks ago. But this time feels a little bit stronger. Some are saying it has to do with the markup in May or the markup at the end of the quarter. Today was the first day. Tomorrow, no one really wants to be long or short into the number. Who knows? But no matter what happens, if you booked your trade, nobody could take it away unless they rob you on the corner and then they're probably going to jail. We talk about this low volume rally that everyone was complaining about here. But if you started shorting on this pivot, you probably couldn't stay with it and you lost money in that low volume rally. The same way if you got out here on this breakout failure, got back in here, you were able to make a lot of money in this trade even though it was low volume, but you had points of reference and here's where we are now. So this is all we know. We have threshold resistance here and here. We'll figure out how we deal with that tomorrow. We have support here and here. We'll see if that comes into play and we'll move and groove based on where these stocks are hanging out and what's taking place. So at this point, it's Thursday. Go have some fun. Don't go have too much fun because tomorrow could be some opportunity as jobs days sometimes provides opportunity or sometimes they gap it some way and they just take it away from you. And if that happens, next week's another week. Have a good night.